finding key support and resistance zones. Remember, we're looking for these zones or levels on daily and 4-hour charts. So how do we go about finding these levels? Let's follow price and see what we're looking for on specific areas. So if you follow price along, you can see we just up, down, up, down, up, down, just complete randomness. But if we start dissecting price, meaning that we look for certain patterns or levels, we can start making more sense. Here again, look at the wicks and the bodies. And if we start putting some horizontal lines across on our chart, you can see it starts to make a lot more sense. Here in this example we have a double bottom in place, and here again, remember, we're looking at wicks and bodies. And then on the top we have a double top in place, and then eventually a triple top, and then price breaks through and it comes back and gives us a price flip. So we're looking for multiple rejections at a level. 3 or more visits to an area adds more weight to the level. We also want to watch the candle wicks and how price leaves an area. So let's talk a little bit about refining support and resistance levels or zones. What you want to look for is you want to see how price leaves an area. Was it a slow, sluggish move away or an aggressive move away? Also, what you want to pay attention to is where you have price leaving a level and the last candle before it leaves the level. So here again, reference the last bearish candle in this up leg before price started to rally, when price approaches that area again. So you can see price was in an uptrend, consolidated very briefly, and then it took a nice break out of the level and then never came back. Here again, same situation here. We dropped nicely away from this area, and you can see price is now coming back down to this level. So this candle right here is what you want to pay close attention to. Here again, how did price leave this area? Was it a slow, sluggish move away or a more aggressive move, like here, here, and here? We note this area here as resistance, and here again you want to pay close attention to this last bullish candle before price broke away. So we reference the last bullish candle before price started to drop, when price approaches the highs again. And it's at this level right here we're looking for a bearish pattern. Once again, you see how price broke away from the lows. We reference the last bearish candle before price broke away. And once again, we're looking for a bullish pattern when price gets back to that area. Now, you may very well find a pattern in this actual swing, maybe a bat pattern or a Gartley pattern or another pattern that you identify with. We haven't discussed patterns yet, but when we get there, hopefully it'll make more sense to you. And once again, you're looking for price to reject from this level. So recap, look for price to move away from an area aggressively. In this case, we had a nice uptrend. Price consolidated very briefly, then took a nice breakout, continued its upward move, it then broke away aggressively. And you want to reference, in an uptrend, you want to reference the last bearish candle before price broke out, and in a downtrend you want to reference the last bullish candle where price broke out aggressively. And you can see when price comes back to this area, we get a reaction, and when price comes back up to the resistance area where price broke away aggressively, we get a reaction. And the same down here where price broke away aggressively, we get a reaction. Okay, these are order blocks in the market where orders stack up, as I showed you in our example of what happens around these levels, and we'll show you a live example shortly.